In this video, I'm going to explain why we believe Bitcoin and the crypto ecosystem are likely to keep falling. We're already seeing how assets like Ethereum are practically knocking on the door, asking for permission to drop. Others, like XRP, have already played out a black swan event and seem to have kicked off their downward trajectory. Meanwhile, Solana is giving us signals that there's a high probability of continued decline. And even if all of this sounds extremely doom and gloom, I'm going to show you why these drops in crypto prices, both the ones we've already seen and the ones that might still come, aren't as bad as they seem. Let's take a moment and bring in a bit of crypto perspective. What you're looking at here is the Bitcoin chart on the 4-hour time frame, and notice how important that bullish accumulation phase was, which started back in late February 2025. We already saw how April 21st, 2025, a key date for the crypto ecosystem, became the catalyst for a black swan event, which led to a 13% price increase in just 11 days. The fact that this black swan came out of an institutional accumulation process is in itself a positive sign when it comes to Bitcoin's directional bias. That much is true. Now, after such a strong bullish impulse, what we're seeing is that the price is being followed up along a trend line, a demand line specifically. The people who entered long at the right time are now in a great position. And remember, in previous episodes of Crypto Insight and during the live sessions on Crypto Insight Premium, we were already turning bullish as Donald Trump's trade war was playing out. We were seeing it as a strong catalyst for an upward move. Even later, as prices continued climbing, we kept supporting that bullish direction in Crypto Insight Premium for the futures market. And now, looking at the 1-hour chart, what we can say is that as long as this trend line you're seeing on the screen isn't broken, we are still obliged to stay positive when it comes to Bitcoin's price. But now, something crucial comes into play, and it's nothing less than the possibility that this structure, yes, the one we're talking about here, could eventually break down. Because if we zoom out and bring in some macro context, remember, we started on the 4-hour chart talking about accumulation. We considered the break of the creek and the follow-up demand line. Now, if we jump to the weekly time frame, it's time to remind ourselves what's really at stake. You're looking at a macro bullish channel on Bitcoin, and we've been talking for quite a while now that everything happening up here could very well have been a market trap, one that at the same time turned out to be institutional distribution. Remember, we were already targeting that institutional level, and almost magically it lined up with these exact price zones. Right here, we were assessing, and we're still assessing, by the way, that this is the classic scenario where smart money distributes. They go after a one target with surgical precision and then reverse course, watching how that same distribution zone ends up being breached and forgotten. This kind of setup is something we see time and again in financial markets. And let's be honest, you already know that here at Crypto Insight, we're generally positive on the crypto market. That outlook comes from a comprehensive analysis that includes macroeconomics, geopolitics, US indices, currencies, and of course, Bitcoin and altcoins. That full picture view is what made us turn bullish on Bitcoin since back on April 9th. That hasn't changed. And right now, you're looking at the weekly chart. So if we're saying that large institutions distributed up here, and there's really no doubt about it, just look at the price action after that range, then it would be somewhat naive, maybe even reckless, not to at least consider the possibility that after the bearish move, what we're seeing now could just be a test of the original breakout point to confirm that the whole thing was a trap. And let's not forget that this so-called trap might include major investment funds who went short. What we don't know is whether they've already taken profits and are now planning to push Bitcoin upward, or if those short positions are still active and they're going to fight hard to defend this test of the breakout origin. That test could give us the harmonic move from the first impulse, right where we might now be seeing the initial leg of a continued downtrend. So someone might ask, wait, I thought we were bullish. Are we turning bearish now? Don't lose the plot. We're still bullish. I'm just putting a possibility on the table, not making a declaration set in stone. I don't have an ego. I can't say with absolute certainty that the market is going up, no matter how much I personally believe that. I'm not here to slam my fist on the table. I'm here to open the table up to possibilities. And this one, even though I don't assign it a lot of weight, still has value, because even just the idea of testing that zone again, even if it doesn't fully play out, already gives us a short-term framework to work with. Please let me explain this to you a bit more clearly. If we understand that after a distribution phase, the institutional player gives us a bearish impulse, we often see smart money coming back to test the origin of that breakout. They go for that creek, that key level that separates the distribution phase from, let's say, the heavens above. And once that test is made, what the institution usually does is go after a harmonic replica of the first move. Now, that's the theory, assuming that the institutional side actually wants to continue pushing prices downward. But hold on, there are a few hidden factors here. First, the institutions that sold up here might have already closed their positions down here and are now flat, or maybe they're still holding on to their shorts. And depending on whether it's one or the other, we'll see a different outcome. But here's where I want to go deeper. Just the fact that we can frame this kind of scenario, the idea that a second bearish impulse might try to mirror the first one, opens up a whole range of infinite sub-scenarios. For example, if the second leg is exactly proportional to the first one, then we're looking at a 100% replication. But there are also alternative realities where the drop is just 80% or 60% or even only 25% or as low as 10% compared to the first move. So just the possibility that the market might attempt this kind of replication already gives us a broad set of scenarios to work with. And that alone allows us at a very specific moment in time to take a position, even if it's small, and potentially benefit from the analysis, even if it's just for a short leg of the move. Does that make sense? You might need to watch that explanation more than once, and I totally encourage you to do that. Believe me, it's worth understanding this. And now, tell me in the comments, did you find this breakdown interesting? And would you like more of these deep dive, advanced explanations in upcoming videos? Because if I see that there's interest, I'll absolutely keep doing it. Now, having explained all that, let's bring it back to the main point. Yes, we're bullish on Bitcoin and the overall crypto ecosystem, no doubt about that, but that doesn't mean we have an ego. Even though we'd like to see prices keep rising, we're not blind. Let me repeat, we don't have an ego, and we fully understand there's still a chance that these institutional players have the power in the upper hand, and they might just try to bring us the replica of that first bearish impulse. Since this is just a possibility, something no one can say with absolute certainty will or won't happen, and because we're at an extremely critical point where all the magic either happens or it doesn't, this is exactly where we find the opportunity. Even if we don't get 100% of the move, we might get 80% or 50% or 25%, or even just 15%. And it's based on this hypothesis that we're able to position ourselves and try to catch that directional move. If all of this still feels a bit unclear, just be patient. By the end of the video, I promise it'll make sense. And I'm going to walk you through it step by step. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Now, knowing that we're at a key moment on the weekly chart, let's zoom into the daily chart just to remind ourselves that there are institutions buying here too. There's been a strong bullish move, and this demand line is currently supporting the uptrend. Remember, the market is fractal. While we've talked about institutions defending shorts on the weekly, on this daily chart, we clearly have institutions defending longs. So now it's a battle. Let's see who wins. Let's go even further down into the 4-hour time frame. What you're seeing here is the demand line again, and also the macro channel ceiling from the Bitcoin weekly chart. This at the same time could be acting as a compression against a key level. But now let's drop to the 1-hour time frame and analyze the volume. And I have to say, Ethereum is like an open book. It often reveals things that other assets just don't. We'll dive into Ethereum in a moment, but first, let's break down what's going on right here. Let's start from the beginning. Look at the climax of this recent upward move. We saw a spike in volume and delta, clearly led by aggressive ask pressure. What that means is that people were buying Bitcoin compulsively, and everything points to this not being the most strategic place to buy since it's at the very top of the move. Then in the next wave, we see another climactic action. The volume is massive, and surprise, surprise, we're still seeing ask pressure. We're seeing investors and traders, most likely retail, desperately hitting the buy button because they think the market, the price, is running away from them, and because I see other people making money and I don't want to feel like the fool left behind. Even if the price is already overextended, I feel that urge to hit the buy button. But of course, those are never the right places to buy, as you can clearly see. Right here, we're already seeing the first aggressive market sell that really caught my attention. Let me zoom in on this for a moment so you can clearly see the delta rotation happening at a very curious spot, a high textural extreme of the entire range. Now, even though this might seem like a terribly placed sell in the middle of what could be a macro distribution, I'm still willing to consider that possibility. And that's only because other assets give me the clues I need to even entertain the idea that an institution could be selling there, even if at first glance, the move doesn't look like it has institutional fingerprints. But later on, when we look at other assets, it actually starts making sense that around that exact moment, specifically April 30th, 2025, there might have been institutional selling happening in crypto. Then suddenly, during that magical climactic moment, we once again see massive volume spike and a delta that's clearly tilted toward the ask side. Basically, what we're seeing is every poorly positioned buy, those high up buys in the range, getting completely frustrated and trapped. And right here, that wasn't a buy, it was a market sell. But that previous one, that was a terrible entry. So what conclusions are we starting to reach? Well, across this entire price range, or call it a bullish channel if you prefer, we can see how the retail investor, the retail trader, is buying in a completely reckless way. And that, my friend, could already be a potential signal that the correct future direction might be to the downside. And look, this is coming from someone who, as you know very well, remains bullish on crypto over the mid to long term. But that doesn't stop us from opening up the chart, zooming into the 1 hour time frame, understanding what's going on, reading the volume, and accepting what we see. And now take a look. If we focus more on the present moment, I'm placing a lot of importance on this trap we're seeing in Bitcoin, because it could very well be the classic compression that tends to happen right before the break of a key structure. And that's exactly why, since yesterday, Monday, inside our private Crypto Insight Premium community, we've been prioritizing short setups in the market. That's why we were looking for market extremes like this kind of trap in Bitcoin and similar high points in other assets that were offering opportunity just as we had planned. Assets like Chainlink, XLM, SWI, and BNB. But the only one that actually gave us the perfect setup for a trap scenario was Bitcoin, as you're seeing now. Take a look at what we mentioned during our live session in Crypto Insight Premium. We noticed that Ethereum still had a bit more to go before completing what could be its creek structure. So, just to give you a heads up, I really believe that in the immediate term, we're going to keep falling. That's what I've genuinely got in my head right now. In the very short term, there's still room for prices to drop. Assets could still dip a bit further, and honestly, it wouldn't be the end of the world, because eventually that dip might give us setups for going long. But right now, as we're watching the intraday price action in the futures market inside Crypto Insight Premium, you already know that the best opportunity, at least for the immediate term, seems to be sticking with the bearish continuation. Then later, we'll look for those long entries like I explained earlier when breaking down Bitcoin's chart. Now with SWI, at best you can look for a trap or some sort of structure. If that trap shows up, you might get a short setup, but if the market doesn't want to move, it just won't. That's when we get this crypto phenomenon where everything else is pumping, well, up 2%, and SWI just sits there, completely unmoved. Then, once the rest of the cryptos start falling, that's when SWI finally decides to drop too. As you've seen, we were already positioning ourselves for this approach, this bearish directional bias I'm sharing with you, not because we don't believe Bitcoin can turn optimistic again, but because in the short term, from a trading perspective, we have to adapt to what the market is is giving us. And it's been giving us these setups since yesterday. And even if we're bullish on the crypto market overall, because we don't have an ego, because we don't pretend to have a crystal ball, we know we need to stay flexible, ready to shift our directional bias whenever the market gives us the signal to do so. And that's a really important lesson for anyone who finds it hard to understand how one day we can be saying we're prioritizing longs and the next day we're prioritizing shorts. There are a lot of people who are new to the crypto space. And when I say a lot, I mean occasionally you'll spot someone in the YouTube comments who don't really understand why one day we're bullish and the next day we're bearish. But I think the explanation has become pretty clear throughout this video. The bottom line is we have to adapt to what the market is giving us, not what your heart wants or hopes for. And that ability, my friend, is worth gold. That said, if you'd like to be part of the live sessions we do inside the private Crypto Insight Premium community, I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. And what better time to do it than now? Our friends at BitUnix have set up an exclusive promo for new users where they'll cover up to $100.00 in losses. So if this is your first time trading and you're looking to join the Crypto Insight Premium Telegram channel, you might want to take advantage of this safety net in case of potential losses. Remember, BitUnix is an exchange that doesn't need a VPN to be accessed from anywhere in the world. To make things easier, I'm leaving you the BitUnix promo details and the Crypto Insight Premium access form in the description and pinned comment of this video. Now that I've explained all this, and while I've been explaining it, notice how Bitcoin is trying to throw a little fake out move on us. I want to show you what's going on with Ethereum, because everything points to things getting confirmed as I'm recording this, but hey, we'll see how it all plays out. We all know we can't always be right. That's just how this world works. But I do believe we know how to defend ourselves pretty well. So let's break down Ethereum, which I told you would be key to understanding this whole situation. What we've got here is a bullish accumulation phase, followed by a strong upward impulse. And then we've got the demand line down here acting as support for that positioning. But now the real question is, what are we seeing here that's making us lean slightly bearish, as you already know? And hey, maybe we're wrong. You know how it goes. Let's drop down to the 1 hour time frame and take a closer look. Now, check out this bullish impulse and how it starts to show climactic volume. The delta is clearly pointing toward the ask. Again, at this contextual high, we're seeing big volume, and it's obvious from the ask pressure that people were trying to buy into the market aggressively. But here's the problem. The price wasn't able to keep pushing up, so ask yourself, who's buying up here if they're not able to move the market? All signs point to it not being institutional. Then we get another bullish push. Huge volume, completely blatant. Just look at the delta. It's clearly ask-driven again, and what really stands out is this high right here. Zoom in and take a good look at the volume and delta. What's interesting is that at first, we were seeing ask pressure. That is, people were market buying. Traders were slamming the ask button, which is basically the buy button. They were buying aggressively at market, but within the same 1 hour candle, the sellers came in even harder. They hit the bid button with desperation, and they won. That's why we're seeing this immediate consequence. It's like reading an open book, and that obviously grabs a lot of attention. Once again, this entire sell-off, I believe it. I genuinely think there's institutional involvement right there. That's what I think. This looks to me like a potential complex correction. And what really stands out is how during these impulses in absolutely terrible places to be buying, we keep seeing that same volume, that same delta. And again, it shows up at the worst possible spot. There's this desperation to buy, buy at a price level where nobody should be buying. And we already know who tends to do that, who ends up chasing those kinds of price locations. Here again, you can clearly see that same frantic behavior. Tons of volume, delta pointing hard to the ask, desperately trying to buy, and honestly, it doesn't look like it's going anywhere. That's why, even though I'm generally bullish on Bitcoin and crypto overall, when I see this and when I understand that there's still the possibility of a retest to the origin of the breakout, leading to a potential replica of the first bearish impulse, well, then I have to acknowledge that possibility. And that means putting our ego to the side and leaning on probability, because, you know, it's not necessarily about seeing an identical second leg. It could be 80%, 50%, 30%, 15%. And if we can recognize that pattern on the weekly or daily time frame, imagine what happens when we zoom into the 1 hour chart like we're doing right now and apply that knowledge. We end up seeing exactly what I'm showing you here. Now, let me be clear. The interpretation of volume and institutional behavior is not easy. It's actually really easy to misread, but I'm sharing with you what I believe we could be seeing. Remember, at the beginning of this video, I told you there are signals that suggest everything might head lower, but I also told you just because we may fall, that doesn't mean it's the end of the world. And now I'm going to explain why. Let's go back to the hourly chart on Bitcoin. Like I've said before, we're bullish on Bitcoin and crypto. That's our original stance, but that doesn't mean we ignore what we're seeing on the H1 chart. Yes, there are signs of downward pressure, no doubt. The real question is, how far can it drop before it's actually a problem? Because right now I'm still bullish. So what could happen? Well, price might want to revisit that support zone. Why not? If it decides to fall, that's a logical target, and look at how much room there is to fall. On the H1 chart, this would be a proper crash by crypto standards. We're talking about a significant drop, and hey, maybe even a trap along the way. Is this the end of the world? No, not at all. Maybe from here the market just continues upward. Why? Because we're still positive on Bitcoin and crypto. Let me say that again. We remain long-term bullish on Bitcoin and the entire crypto space, but at the same time, we're seeing signals that there's selling pressure hitting the ecosystem. Like I told you earlier, inside Crypto Insight Premium, just yesterday, we were prioritizing short positions, but now as I'm about to start a live session with the premium community, there's a real possibility that after reviewing the data, our conclusion could shift toward taking longs. I'm saying that's a possibility, and I'm saying it to make a bigger point, especially for those of you who are newer to all this, because the world of technical analysis and trading, it's not about locking yourself into one idea or relying on something as basic as seeing the RSI in oversold territory. Just because some YouTuber with millions of views shows you a red or green oscillator, or maybe mentions volume once in a while, doesn't mean A plus B will always equal C. Let's be real. That kind of approach doesn't get you anywhere. Don't fall for it. The truth is, discretionary trading goes way deeper than that. It's more nuanced, more complex, and it's absolutely crucial. Listen to this. It's vital for you to become a better trader by developing the ability to flip your directional bias from bullish to bearish, from bearish to bullish, not just from one day to the next, but from 1 hour to the next, even from 1 minute to the next. Only those who have truly lived and breathed the markets for a long time will know exactly what I'm talking about. If you're brand new, unfortunately, you might watch this video and think I didn't understand anything, or feel like I said everything and nothing at the same time. And honestly, that's okay. It's normal, but I still want to keep making this kind of content, even if it's complex, because I know a large portion of my audience who've been following us for a long time do understand what we're talking about. And if you're still in the early stages, or if after watching the video you feel like you didn't get much, don't worry, it's normal. Give it time, be patient. This isn't a channel where we talk about the absolute basics of analysis or trading. Quite the opposite, actually. We work with advanced technical analysis, and I try my best to communicate it in a simple way, but it's totally normal if some of this still doesn't click for you, even if you're not new. Just give it time. Keep watching the videos, subscribe to Crypto Insight, and you'll see, I've seen it happen 1,000 times. A few months from now, you'll message us and say, hey, back then, I didn't understand anything, but now everything is starting to make sense. We get messages like that every single week. So if you found this advanced technical analysis interesting, let me know in the comments. Give the video a like, subscribe to the channel, and hit the bell so YouTube notifies you about future uploads. Don't forget to subscribe so you can keep improving your analysis and your trading. See you in the next one.